We'll start with the answer first, then go into the explanation. Bitcoin is not a good inflation hedge in the short term. Okay, now we'll get into the explanation. Firstly, inflation is the rise in prices of goods and services over time, which lowers the purchasing power of your money. An inflation hedge is an investment that is expected to protect against the negative impact of rising prices by increasing the price of your investment to make up for the loss of purchasing power of the currency you use, like the dollar or the pound. Bitcoin is decentralized digital currency that operates on a peer-to-peer network. It's essentially software, therefore it's a form of technology. When it comes to the price volatility of Bitcoin, we've seen it behave like a risky high-growth company during this period of inflation in 2022. Unfortunately, high-growth companies like Tesla, Google and Amazon go down in price when inflation increases due to the interest rates rising. From an investor's point of view, in the short term, it makes sense to not want to pay a high price for a company which has uncertainty over its future, when they can buy government bonds and get paid 4% on their investment with the lowest risk possible. Bitcoin has been following that risky high growth company trend, which means it's not a good inflation hedge in the short term. However, when it comes to the long term, it is very interesting. Because of its limited supply and decentralized nature, the total supply of Bitcoin is capped at 21 million Bitcoin, which means that its supply cannot be printed like traditional forms of paper money. Bitcoin is also easier and less expensive to transfer and store, therefore it has an advantage over gold. Bitcoin is also the first and most liquid cryptocurrency, so it has an advantage over the other cryptocurrencies that want to be like Bitcoin. Another advantage is that Bitcoin is spreading very fast and being adopted by more and more people every year, so the risk of it going back to zero is low. Therefore, if it continues this adoption trajectory, its market cap and liquidity will increase and become more attractive to the wealthy and will likely be adopted as part of their asset portfolio. This brings me to the conclusion that in the long term, if more and more people put a small part of their wealth into Bitcoin as a hedge, the price can only go up, which will become a tailwind for its adoption, therefore creating a flywheel effect of continued growth, adoption and price increase. In that scenario, it would make it a very good inflation hedge in the long term. However, in the short term, it's still a relatively new and volatile asset. To wrap it all up, Bitcoin has the potential to be a good inflation hedge, but it's still too early to say. Therefore, low risk exposure of around 1 to 2% of your net worth could be considered as part of an overall long-term investment portfolio strategy.